with an unemployment rate nicely in the single digits, south of 9%. And the number one question everyone's asking right now, Larry, what does it mean for the fiscal effort in Washington? Can you draw the line for us? Just join those dots.
No, I really can't. I mean, the conversations are going on daily and will continue to go on. We still have the view. First of all, today's number, 8.4% unemployment. I just want to note, I think that shows that President Trump's idea of a generous unemployment assistance plan that he's put as executive order, but not necessarily an extravagant one. I think he's been borne out to be exactly right. 8.4% unemployment is really the headline story of this massive jobs improvement report. Now, regarding the discussions on the Hill, you've got a continuing resolution discussion. You've got a CARES 2 Act, or whatever you call it, discussion. There are areas of agreement. There are wide areas of disagreement, however, on the size and scope. We have the view that a smart package, a well-targeted package, for example, helping small businesses with PPP extensions, opening schools, COVID help, kids and jobs are our watchwords. Why don't we just pass a more modest package instead of a package that goes into multi-trillion dollars that we don't need and in the long term would be counterproductive? So we'll see, Jonathan. I don't want to forecast. I don't want to get in the way of the talks. The talks are continuing. But that's our basic point of view. If you agree on 4 or 5 things, let's go for it. OK, let's stop dilly-dallying around. Let's go for it. But not the entire left-wing agenda from the other side of the aisle. That's not acceptable.
Larry, you've never been afraid of making a forecast, so I'm sure you can make a forecast on the economy with us right now. I'm trying to gauge from you where you think the economy is going and what that means for your policy stance. Do you think this is a self-sustaining recovery now, independent of the need of further stimulus?
Yeah, look, again, extending small business loans would be a good thing, and there's some other important facets. But I do think it's self-sustaining. I've said this before. What you have here is a housing boom. You have a retail sales boom. You have an automobile boom, strong consumer spending. And we're getting, we've recovered over half of the jobs we lost last winter. Inventories have collapsed in the second quarter. I think they were down $300 billion. So the way I see it, Jonathan, is to meet these demands, housing, construction, automobiles, consumers, retailers, and so forth, we're going to need to rebuild inventories. And that is going to add impetus to the second half growth, which will be at least 20% and perhaps much more. I think the Atlanta Fed has the third quarter at 30%. But anyway, self-sustaining, yes. We're going to go on for quite some time. Next year is going to be a banner year for the economy and for jobs, assuming the policy regime is pro-growth with incentives. So I'm relatively optimistic. Now, I will say we have much more work to do. We're not out of the woods. We have too many people unemployed, even though the numbers have improved radically and way ahead of expectations on Wall Street. We have more work to do. There's still way too many unemployed and much too much hardship. I get that. But I think one has an optimistic rebound in mind. And I think, incidentally, the virus numbers are helping quite a bit as they flatten down and hook lower.
Larry, we talked about that hardship. We talked about the disparity beneath the aggregate numbers that you and I have talked about a million times over the last several months. Still a lot of pain out there. I'm just trying to gauge from you there, as we have this discussion about this recovery, how comfortable you would be going into the back end of the year without an agreement with the other side of the aisle.
Look, we can live with it. We can absolutely live with it. It depends on the package. A bad package would not be helpful. A smart, good package, well-targeted, would be helpful. Okay? If Congress wants to legislate longer-run unemployment assistance, if Congress wants to put in, let's say, benefits for bonuses for reemployment, fine. If Congress wants to help out with funding a bit on school openings, fine. That sort of thing would be extremely positive in my judgment. Lengthening PPP for small business. Sure. Do we absolutely need it? No, I'm not going to precondition anything here. What's good is good independently. What's not good is not good independently. Right now, the economy is on a self-sustaining recovery path, in my judgment, and we'll continue along those lines, and we'll continue to surprise on the upside. And I don't want anything to get in the way. I mean, look, one of the issues here, let's put it right on the table, it's like the elephant in the living room, is the other side of the aisle, the Biden team, wants a $4 trillion tax hike. Now, to me, coming off a deep and painful pandemic contraction, That is a terrible idea. I don't care whether you're a Keynesian or a supply sider or what. You wouldn't be picking taxpayer wallets and purses. Stop pickpocketing their money. They need more money, not less money. I'd rather they had more money through tax cuts, which President Trump emphasizes, rather than spending measures, but let people keep their own money. But the idea, and this is the uncertainty factor, with the election looming, and it looks like a toss-up right now. President Trump has gained about 6 or 8 points after the convention. The idea of a gigantic tax hike on individuals, payrolls, companies large and small, that is a hurdle for this self-sustaining recovery. So I think it's important to just put that right on the table. I don't understand it. I don't care. Left, right, Keynesian, supply side. Who in their right mind would be jacking up taxes by $4 trillion? And this idea that it's just rich people. First of all, rich people help investment a lot, and we like to reward success in the Trump years. But the second point is middle-class people will bear the brunt of any tax hike. That always happens when politicians say it won't. It always happens, and they'll go deep into everybody's pockets. Wrong policy.
Larry, I'm not here to advocate for anybody, and I'm not here to talk about electoral politics with you as well. Last time I checked, the former vice president hasn't been elected to public office right now. You guys are running the government. You have to work with the other side to some degree, I guess. I want to talk about language with you. There's some language around aid for states. I keep hearing this language that we don't want to use money for bailouts of states. And I'm trying to understand, is there a distinction between state aid and state bailouts? And how do you draw that distinction?
Well, I think the president has said it well a number of times. He doesn't want to bail out inefficient government operations at the state and local level. The administration has been very generous in the prior packages and other means of providing aid to states, principally for COVID-related reasons, but also many other reasons, including, by the way, equipment for COVID reasons, and testing for COVID reasons, and so forth. We've been very generous. Hundreds and hundreds of billions of dollars have been injected into state and local governments. That's fine. We needed that. We were in a pandemic emergency, no question about it. On the other hand, one area, for example, the president has singled out badly unfunded pensions at the state and local level. We don't believe a COVID package is the right method or the right vehicle for that. There's a number of other spending issues in the other teams' proposals that have nothing to do with COVID. By our calculations, over a third of their proposals are non-COVID related proposals. That should be scrapped. So what President Trump would say is, if it's necessary and it's properly targeted, Jonathan, then we would probably see our way to a compromise. But at the moment, we're not there. And again, I repeat what the Chief Meadows has said, what Secretary Mnuchin has said. We agree on some areas. And if we could find 4 or 5 areas, key areas, and I will once again say reopening schools and extending small business assistance, if we agree on that, let's just pass it. Let's just have a smart, well-targeted, smaller package.
So what would you do, Larry, if the state-level austerity begins? In the federal government, what will be the response when you start to see that play out? States across America who are up against budget constraints can't use the bond market in the same way the federal government can. What's the response? What's the plan? What's the strategy?
Well, actually, I will just say this. The Federal Reserve's lending facilities include a very generous tax-free municipal bond lending. So states can tap into that, and so can localities. The Fed has been very generous about backstopping tax-exempt municipal-type bonds. So they should make use of that. I think that's a plus, particularly if you need 2 or 3 year type paper. Now, the other point I'll make is it's quite true that the damage, the economic damage as a result of the pandemic has damaged budgets at the federal, state, and local level. No question about it. It is also true, however, revenues are coming in much stronger now as the economy picks up steam. I think there's a lot of underestimating going on, and the extent to which this recovery is helping all finances at all levels. Revenues at the federal level have improved enormously, and they are showing great improvement at the state and local level. So I think people should put that on the table, put that on the scoreboard. You know, let's not just rush into stuff. That's been one of the issues here. Let's look at things carefully and analytically and assess them and their need. What is essential, what is smart, that's fine. But what is not essential and just throwing money at places to fund more poor management or pension funds. That's not what we want. That's a different conversation, and it's a different moment in legislative time. That's all I'm saying. It might be worthwhile. Let's look at pensions, but not now, not the COVID myth. Let's have a separate item for that.
Well, Larry, let's talk about a targeted effort then, and the airlines specifically. The President of the United States said recently, we'll be helping the airlines. You have to help the airlines. Arguably, the most free market approach to helping the airlines is not throwing aid at them. It's having a proper testing regime at airports across America and getting that New York to London corridor, of which I've got skin in the game right now, Larry, on the other side at the moment, trying to work out how to get back. How we get that reopened and how we get these airlines back to work. I think that's the key for these companies. It's not about throwing money at them. It's how we establish safe testing regimes. And I'm just wondering why we haven't seen a big effort publicly to make that happen, Larry. Why not?
Well, because there's been a huge effort privately, and we will be unveiling the positives of that private effort. We are in constant communications with the air carriers. We agree with what you're suggesting with respect to testing and taking temperature and a host of other measures. We also are working with the airlines regarding contact tracing and the feasibility of that without incurring too much additional expense. We're looking at telephone apps for that. We're looking at testing before you get on the plane and after you get on the plane. I mean, when you land on both sides of the pond, so you won't have to have a 14-day quarantine. We're looking very intensely at that. All that said, I will add, however, the President has said a number of times, airlines are crucial. It's one of the key arteries of our economy, transportation and so forth. If they need additional assistance, we stand ready to work with them to hammer out additional packages. Secretary Mnuchin is leading that charge. So we've got information, testing, additional assistance on the table for the airline business.
When will we hear about it, Larry? You've talked about it privately. When will we start hearing about this publicly? When is the big unveil, so to speak?
Without a specific timetable, I would say it will be a matter of weeks. Not
market
months,
right now
not
down
years,
2.5%, Larry, as you and I are having this conversation, not just about big tech. I imagine there's some nervousness about the read across from a labour market that's still doing OK and what it means for the policy effort down in Washington. I've raised this issue with you before. There is some cynical people among us, and I'm sure you'll appreciate that, Larry, who believe that unless the market gaps lower, there won't be any urgency down in Washington to cut a deal. Now, is the fiscal approach independent of the price action in financial markets, Larry?
Well, the fiscal approach is not independent of the economy, but I don't see there's no magic special formula between the stock market and a possible additional assistance plan. There's no direct link. There's no formula. I wouldn't want to go there. Frankly, for what it's worth, Jonathan, I think, you know, in markets, nothing goes up in a straight line. We've had a phenomenal rally in the stock market, which itself, by the way, represents confidence in the economy later this year and next year. But the tech sector is undergoing a correction right now. And as you well know from your coverage down through the years, that's a fairly normal item. I don't think anybody should panic. The economy is definitely improving.
Larry, before we let you go, I wanted to talk about something personal with you. You and I have traded some punches over the years, with me sitting here and you in that position as well. Earlier this week, you talked about recovery and being 25 years sober. And I just wanted to say personally to you, congratulations, Larry, and thank you for sharing that story earlier this week.
That's very kind of you, Jonathan. It's perhaps the greatest achievement of my life. And I'm most grateful to my friends and family, my saintly wife. I came back to faith in recovery and 12-step meetings. I'm in touch with my friends all the time. The First Lady did a fabulous job yesterday. My hat's off to her. It's a delicate subject. She brought in people in recovery, people who are employers and employees, in a wonderful roundtable. Again, it's a phenomenal thing that the First Lady did. I was honored to participate. I would just say, Jonathan, again, thank you for noticing. Look, as I mentioned yesterday, there's no question. I would not be where I am in this position, in this job, which is the pinnacle of my professional career and a great honor bestowed on me by the President and the First Lady. I would not be here if I weren't sober all those years.
Thank you, sir, and thank you for your effort. And thanks for being here and allowing me to interrogate you every single month, as always.